Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports, we connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. It's National Peanut Butter and Jelly Day. I like peanut butter and jelly. We used to have our boat many years ago when I was younger. We used to fill up a bag, and you take the bread out of the bag that it comes in, make peanut butter and jelly, and then stick it right back in the bag again. Make a whole loaf worth. Peanut butter and jelly sandwich, take it out there on the water, and hopefully it didn't get too soggy when you stuck your hand in to get a sandwich or pass them out. But the question of the day, do you like chunky or smooth peanut butter? Chunky or smooth peanut butter? If you are watching us on RonSiegelRadio.tv right now as we record live here, it's about 9:05 in the morning here on the West Coast. Put that in the chat. Let us know, chunky or smooth. If you're watching a replay, put it in the chat. If you're listening to us on ABC News and Talk in the afternoon, just yell at the radio. We'll hear you. Smooth or chunky peanut butter? That is our question of the day. Let's take a look and see what else is going on in the markets. Dow Jones Industrial Average up 67.5 points. The S&P is up 12.5. The NASDAQ, I don't know why some of these numbers seem kind of goofy to me, because when I left for the studio this morning, everything was down. There was like maybe one or two stocks that were up. Let's see. Dow, again, up 61 points. S&P up 12. NASDAQ up 71.5. Oil up 21 cents a barrel. Should we look at it? Well, California prices are $4.88 a gallon right now. And why is that happening? Well, basics, economics 101. So gas prices here in the formerly Golden State were up 3.5 cents overnight. And I think it has to do, actually, I don't think it has to do. There was a big drawdown of gasoline in California. What does that mean? Well, the demand was higher than the supply in California for last month. So here's what that's going to do is it brings gas prices up, because you can't get gas anywhere else if you want to sell it in California, because no one has the regulations we do. We like to regulate everything. So it's not like you can just go to Montana and grab some gasoline, or one of the Dakotas and grab some gasoline and bring it into California. No, they don't make the same blend as California. And that's why we are the leader. And Josh, we got to put a song on there. We are the champions, right? For gasoline prices here in California. I'm not sure that's a something you want to be, but it basically, it is what it is. We are California 488. Of course, you're going up there in Nevada too, $3.50 a gallon, $3.60 a gallon, give or take. in Nevada. So maybe I guess a lot of people are buying gas in Nevada also, or maybe Nevada, you can't get gas out of California right now because we don't have a whole lot. Maybe I think you looked up one other time. I think there's one refinery or two refineries in Nevada that they actually will refine gasoline, and they don't have quite the regulations we do. So highest price in the land. Now we're about almost 8% higher in California than Hawaii. They must have kind of like a price fixing or something in Hawaii, because it's almost right around 450, 455 a gallon in Hawaii. It never seems to fluctuate a whole lot. So they must kind of regulate. Well, Hawaii and regulation, yeah, that's about as bad as California. So we are the highest of anybody. 271 in Mississippi is the cheapest gasoline. Over $2 a gallon cheaper than we are here in California. And today we are at Liberation Day. Now, whether you like Trump or don't like Trump, it doesn't matter. We've got, they're going to announce at 1 o'clock our time, tariffs. What is the plan on tariffs? Now, again, I'm not going into the good or bad of tariffs. I'm going to say this part of it, though, because one of the things the markets always hates is uncertainty. And right now, do you know what the president's going to do on tariffs today? If you do, you're better than 99.999% of the world. Because I'm not even sure, based on some of the reports earlier today, that the administration knows what they're going to do with tariffs today. I think they're still working on the final details. But here's the thing, is that we did hear from our Treasury Secretary that when they do these tariffs, it's going to be a maximum, not a starting point. Well, unless some of the other countries get into a trade war, and then we'll see how they do with that. But here's what that means for the market, is once the market knows what's going to happen with tariffs, it takes the uncertainty out of the market and lets businesses know, hey, this is what you're going to have to deal with. Businesses, American business, can deal with anything. The issue becomes the lack of knowledge is what is hard to plan for. If you're going to have a 25% tariff on a product coming into the U.S., are you going to get more or less sales? Well, if it's a 25, okay, we can deal with that. If it's 50, the business can deal with that. But if it's 25 today and 50 tomorrow and 75 the next day and nothing the day after that, that's hard for businesses to plan for. And why would they want to invest more money in something that they have no clue what's going on? So just the mere fact that the uncertainty is going to come out of the market, that'll be helpful. Taking a look also at Tesla shares. So that's a biggie right there. So maybe that's what's driving the market right now, is Tesla's stock was down dramatically earlier today. Why? Well, because there was a smaller delivery of cars, of the Tesla cars, in the last month. But here's the problem with that, is the market looks at that and they understand this, but the general public does not, that cars are only a small part of what Tesla does. Tesla's into robotics and artificial intelligence and all these other things. So the bottom line there becomes, okay, if it's just cars, we could understand that, but there's more to it. Market says, okay, Elon Musk says he's only going to be working in the administration for a limited number of days. And maybe the market's like that, maybe they don't. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, pre-retirement planning with the HomeSelect loan. We'll talk about it. Townhomes, a smart solution for today's first-time buyer. Boost your credit scores fast. We're going to tell you how to do that as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. They only tell us the number you need to put in your mortgage calculator to find out exactly what your monthly principal and interest payment will be. If you don't have a mortgage calculator, well, get it for free. rsrlinks.com/mobile app, rsrlinks.com/mobile app. And let's see the rates yesterday. The conventional 30-year fixed, 6.568, that was down. Jumbo 30-year fixed, 6.758, that was up. FHA 30-year fixed, 6.263, that was down. VA 30-year fixed, 6.067, that was down. USDA 30-year fixed, 6.269, that one was down as well. If you want our thoughts about the market each and every business day morning, again, as early as the data allows, rsrlinks.com/market minute, rsrlinks.com/market minute. Let's take a look and see what the markets are doing today. The S&P 500 is up now 25.5 points. The 10-year treasury, that's turned around also. That's up 2 basis points now at 4.19. The mortgage bond is down 5 basis points, which means rates are up just a little bit. And let's take a look and see, because all those numbers are readily available on that super secret website, google.com. But let's take a look and see what's driving the markets today. Again, it's a lot about tariff talks, and we're going to get that information on what they're calling reciprocal tariffs. Supposed to be around 4 o'clock Eastern time, 1 o'clock for those of us on the West Coast. We did get the ADP employment report. The March ADP employment report showed that there were 155,000 jobs created during the month, which was stronger than estimates of 105 to 120,000, depending on which estimate you look at. There was a small 7,000 positive revision to the February number, bringing that report to 84,000, still very anemic. The job gains were spread out between all business sizes and most sectors. After several months of very weak or negative job growth in small-sized businesses, there was a jump of 52,000 in that category. Looking at wages, job stayers, or those who remained at their jobs, had their pay increase at 4.6% on an annual basis, which is a drop from 4.7% in the previous report. Lowest level since June 2021. Job changers, or those finding a new job getting poached by competition, saw an increase of 6.5%, which is down from 6.8% in the previous report. The spread between stayers and changers matches the lowest on record, which means there is less of a premium for changing your job in regards to pay, which means less enticement and poaching from companies and ultimately less hiring needs. This coincides with why the quits rate in the JOLTS report has been dropping and at very low levels. Bottom line, even though the job gains were stronger than expected, wage pressures did decelerate, and bonds appeared to be focusing more on the slowing economy and tariff fears. Atlanta Q1 2025 GDP estimate. The Atlanta Fed just yesterday released their updated first quarter GDP estimate, which has been revised lower from negative 2.8% to a negative 3.7%. When factoring in foreign trade of gold, they moved it to lower from a negative 0.5% to negative 1.4%. Clearly, Atlanta Fed is expecting the economy to contract in the first quarter, which could be a recessionary signal if actual GDP comes out negative. And if that occurs, it will definitely get the Fed's attention and might help mortgage rates. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. So we've been talking to you a lot about the big need that we have, or most of us have, for monitoring our liabilities, our debts, because we keep seeing debts going up and up and up. And who watches them for you? Who takes a look to say, hey, Mr. and Mrs. Jones, if you go and talk to our friends over at the credit union or at the bank or our friends at Geneva Financial, you might find there's an opportunity for you to pay a little less money on a monthly basis. We have come out with a new alliance. I didn't even give this to Josh yet because it just got finished this morning. Josh, try this out and make sure it's working. rsrlinks.com/Sora, S-O-R-A, rsrlinks.com/Sora. And it's just like a mini application. It takes less than 30 seconds to fill it out. And it's things that you know off the top of your head. But when you do that, it's going to give us a insight. It doesn't give us access to do anything, and it doesn't hurt your credit score at all. But rsrlinks.com/Sora, and you're able to take a look and see. It'll give us one of your credit scores, and it populates with what is showing as liabilities, debts. And it gives interest rates, payments, so we can take a look at it and share, because we are certified liability advisors. It doesn't mean it's just about the mortgage. It's about liabilities as a whole. And we want to make sure we help you as much as we can. So rsrlinks.com/Sora. But let's do a Your Credit Matters segment today, being brought to you by rsrlinks.com/debt-free. rsrlinks.com/debt-free. Boost credit scores fast. Secrets to a higher numbers and home buying success. Ron Siegel Radio Show, we are here to help you navigate the often confusing world of finance, especially when it comes to your home. And let me tell you, if there's one question I hear almost as much as how do I fix credit errors, it's this: Ron, what's the fastest way to improve my credit score? And I get it. We live in a world of instant gratification. Everyone wants quick results, especially when it comes to their finances. You want that dream home. You want that low mortgage rate. And you want it now. But here's the truth. There's no magic bullet. Credit repair and score improvement is a marathon, not a sprint. Now, I'm not saying it's impossible to see improvements quickly. You can. But the idea that you can raise your score 100 points overnight is a myth. And those companies that promise such things are usually full of it. The reality is your credit score is a complex calculation based on several factors: payment history, amounts owed, length of credit history, new credit and credit mix, and each of these factors takes time to build and improve. Now, if you follow our strategy, rsrccpayment.com, you'll maximize your FICO score over time, and it doesn't take a lot of work. rsrccpayment.com. So what are the steps you can take to see improvements? First, let's talk about the biggest factor: payment history. Every late payment, every missed payment dings your score, and those dings can last for years. So the fastest way to start improving your score is make all your payments on time every time. Set up automatic payments if necessary, but make sure you are never late. Next, let's talk about amounts owed. This is your credit utilization ratio. Ideally, you want to keep your balances below 30% of your available credit. The lower, the better. If you're carrying high balances, start paying them down as quickly as possible, and this is a big score booster. Now, length of credit history takes time. There's no way to speed that up, but you can avoid closing old accounts even if you're not using them. The older your accounts, the better. New credit is another factor. Opening too many new accounts in a short period can lower your score, so be selective about applying for new credit. And finally, credit mix. Lenders like to see that you can handle different types of credit like credit cards, installment loans, and mortgages, but don't open new accounts just for the sake of it. Now, here's where it gets tricky. Many people try to tackle this on their own, but they end up making mistakes that actually hurt their score. They open the wrong type of account, they close the wrong accounts, or they fall victim to those quick fix scams. That's where a certified liability advisor can make all the difference. I can help you create a personalized plan to improve your credit score based on your specific situation. I can help you identify the areas where you need to focus, and I can guide you through the process step by step. I understand that you want results, and I'm here to help you get them, but I'm also here to tell you the truth. Building a good credit takes time and discipline, but the rewards are worth it. Think about it. A higher credit score means lower interest rates, which means lower monthly payments. It means you can qualify for a better mortgage, which means you can afford a better home. It means financial freedom. Don't let those quick fix promises mislead you. There is a right way to do this. And when we need the experts, we just call in the big guns. Jeff Sipes and his team over at Blue Water Credit, they help us and they help the listeners of Ron Siegel Radio all the time. I am a certified liability advisor, CLA, helping families build wealth through strategic debt management. If you're looking for the right way to improve your credit score and want to learn the honest truth about building credit, please give us a call at 800-306-1990, 800-306-1990, or visit our website, ronsiegelradio.com, ronsiegelradio.com. Let's create a plan that works for you and get you on a path to financial success. That is the Your Credit Matters segment brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, pre-retirement planning with HomeSelect? Really? A loan for retirement planning? Yeah. Buyers have more negotiation power. Here's how to use it. Townhomes, a smart solution for today's first-time buyers. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Townhomes, a smart solution for today's first-time buyers. Buying your first home in today's market can feel tough. Between high home prices and mortgage rates, affordability is still a big challenge. And some buyers are making one simple trade-off that's getting them in the door faster: square footage. According to the National Association of Home Builders, 35% of buyers are willing to purchase something smaller to make home ownership happen. And one place you can usually find a smaller footprint and sometimes better affordability is in townhomes. Why townhomes are gaining popularity? Townhomes typically cost less than single-family homes due to their more limited size. And that's a big plus for today's budget-conscious buyer. As Realtor.com says, quote, today's market affordability remains a key priority for home buyers, making townhomes an attractive option because they're often priced more reasonably than single-family homes. It makes them especially appealing to first-time home buyers on a tighter budget, unquote. So if you're trying to buy but feeling stuck because of rising prices, shifting your focus to townhomes could be one way to get into homeownership without maxing out your budget. Builders are responding to the demand. Builders have seen buyers' appetite shift to smaller homes, and they're adjusting to meet the demand, as Joel Berner, senior economist at Realtor.com, explains, quote, builders are making a concerted effort to provide smaller, more affordable inventory to the market in a way that the existing home market cannot. Townhomes are a significant portion of that effort, unquote. And the numbers back it up. According to data from Realtor.com, townhomes now make up a bigger share of new construction listings than they did just a couple of years ago. Take a look at the chart that we're showing if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 or FM 98.1 video feed. We've got a chart showing there are more townhomes on the market lately. That means if you're interested in this type of house, you have more choices than you would have had over the last few years, and more options that are potentially more affordable are definitely a good thing. It should make your search for first home a bit easier. Is a townhome right for you? If you've been focused only on more traditional homes with their own yards, an agent can help you explore whether a townhome could work for you. Who knows? You may find out you love the lifestyle. A lot of people do. As an article from the National Association of Realtor, NAR, explains, quote, townhomes tend to cost less than single-family detached homes and can be appealing to young professionals who may desire medium-density, walkable neighborhoods, unquote. That's because they're lower maintenance. They can provide a sense of community with other residents, and they have their own unique amenities, not to mention they give you the chance to start building wealth through home ownership without the upkeep that comes with having your own detached single-family home. And that can be great for first-time buyers who are a bit worried about the maintenance anyway, but they also come with some other considerations, like dealing with the noise through shared walls. If you're a renter right now, maybe you're used to that already. But these are the types of things you'll want to think about. And that's where an agent's expertise comes in. They'll help you weigh the pros and cons so you understand how a townhome fits your lifestyle and long-term goals before making your decision. Bottom line, if you're struggling to find a home within your budget, it may be time to expand your search and consider options you haven't before, like townhomes. Sometimes compromising a little bit on space is worth it to get your foot in the door. What matters most to you? Space, location, budget? Let's figure it out where you can flex to make home ownership happen. And hey, don't forget to get our buyer's guides. We've got two. We've got the one that we put out each year, rsrlinks.com/HBG2025. That's our annual buyer's guide, rsrlinks.com/HBG2025. And we also put out a quarterly update, rsrlinks.com/HBG, rsrlinks.com/HBG. That is the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. And let's see, Borrow Smart segment today being brought to you by GetHomeSelect.com. So this is one of my favorite loans. This actually is my favorite loan for anybody that qualifies for it. Got to understand it. It's not your typical run-of-the-mill, but the HomeSelect loan from Geneva Financial. We've done a lot of videos on it, GetHomeSelect.com. So another edition of the Borrow Smart segment of Ron Siegel Radio. This is your home and finance connection, where we don't just talk about real estate and loans, we talk about life. And today we're diving into something that hits home for a lot of folks in their 50s and early 60s, pre-retirement planning. Now, if you're like most people I speak to, retirement isn't just a finish line, it's a launch pad, a chance to live life on your terms. But here's the challenge. Many retirees are carrying mortgage debt into retirement, and they're paying tens, sometimes hundreds of thousands of dollars in interest along the way. What if I told you there's a way to dramatically reduce your interest expense, accelerate your path to being debt-free, and increase your net worth, all without sacrificing your lifestyle? It's not a fantasy. It's a financial strategy. Today, I want to introduce you to a powerful tool that's helping families like yours plan smarter for retirement. It's called the HomeSelect loan. Let's get real for a moment. According to recent data from the Federal Reserve Bank of New York, only 13% of U.S. workers believe they'll lose their job in the next year. That's good news. Even better, confidence in finding new work is up 56%. But for those of us nearing retirement, job loss isn't really the issue. It's what we've done with the income we've earned all these years. Are you maximizing every dollar? Are you making your debt work for you? Or is it the other way around? Here's the traditional retirement plan. You work 30 or 40 years, pay a 30-year mortgage, and hope your home is paid off by the time you retire. But let me ask you, what if your loan can help you build wealth instead of just draining it? What if your mortgage didn't lock up your money, but rather help you free up cash, reduce interest payments, and put you in a stronger financial position for retirement? That's exactly what the HomeSelect loan is designed to do. So what is HomeSelect? It's not your typical mortgage. HomeSelect is a first lien HELOC, a line of credit that replaces your traditional mortgage and functions like a checking account. But unlike a standard HELOC, HomeSelect is structured to help you pay down your principal faster while giving you 24/7 access to your home equity if you need it. That's right, your income. Paycheck, Social Security, pensions, rental income can be deposited right into your HomeSelect account. Every dollar you deposit automatically reduces your loan balance, saving you interest daily, not monthly, like a traditional mortgage. And unlike old-fashioned 30-year loan, you don't have to wait decades to see the benefit. The interest savings starts from day one. Let me give you an example. Let's say you have a $500,000 mortgage with a 6.5% interest rate. Over 30 years, you'd pay roughly $638,000 in interest. On top of the loan amount, that's $1.1 million out of your pocket. With HomeSelect, you could save tens or even hundreds of thousands of dollars in interest, depending on your cash flow. Because your deposits reduce your balance every single day, you're constantly minimizing the amount of loan you're being charged interest on. And here's what makes it ideal for pre-retirees. Lower required monthly payments, giving you flexibility during income shifts. Reduced effective interest rates, so more of your money goes to principal. Shorter loan term, getting you to retirement debt-free. Increased net worth, that's to interest savings and retained equity. Now, this loan isn't for everyone, and frankly, it's not meant to be. HomeSelect is designed for financially responsible, cash flow positive households, meaning people who are strategic with their money and want to make it work harder. If you're already planning for retirement, managing income expenses carefully, and thinking of long term, this may be a perfect fit. You don't have to be a millionaire. You just have to think like one. GetHomeSelect.com. GetHomeSelect.com. Let's talk flexibility. Life happens. Retirement might mean a second career, consulting or traveling. You need a financial vehicle that can adapt with you. With HomeSelect, you're not locked into fixed payments. You're in control. You can pay down aggressively or hold on to cash when needed, all while reducing your interest expense or interest exposure. And if you're worried about risk, here's some reassurance. There's no balloon payment at the end. The loan automatically transitions from a credit line to fixed amortization in the final 10 years. There are rate caps to protect you from market spikes. Let's wrap up with the big idea. Your home is your largest asset. Your mortgage is likely your biggest liability. Why not use one to improve the other? The HomeSelect loan can transform your final working years into a springboard toward a stronger, smarter, debt-free retirement. If you're planning to retire in the next 5 to 10 years or even sooner, don't overlook your mortgage strategy. It could be the single biggest lever you have to reduce financial pressure, increase liquidity, and give yourself peace of mind. I am a Certified Liability Advisor, CLA, helping families build wealth through strategic debt management. If you're interested in learning whether the HomeSelect is right for you or for your pre-retirement plan, reach out. GetHomeSelect.com. 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 I'll be glad to run a personalized simulation and walk you through the numbers, because retirement shouldn't just be something you survive. It should be something you enjoy. Until next time, this is Ron Siegel signing off from your trusted source for home finance and lifestyle insight. That is the Borrow Smart segment, brought to you by GetHomeSelect.com. GetHomeSelect.com. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, buyers have more negotiation power. Here's how to use it. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Buyers have more negotiation power. Here's how to use it. You may have heard there are more homes for sale right now, and while that'll vary depending on the market, it means that overall things are starting to lean in a more balanced direction. As that happens, some sellers are a bit more open to compromise. Here's what that means for you. You may regain some negotiating power that can translate into savings perks or even better terms on your purchase if you know what levers to pull during negotiation. Why an agent is an essential part of the negotiation process. The complicated part is knowing what is and isn't on the table. That's where your agent comes in. According to the National Association of Realtors, besides finding the right home, the top thing buyers want from their agent is help negotiating the terms of the sale, followed by negotiating the price. Here's why. Agents are skilled negotiators and are trained for moments like this. Since your agent is an expert on the local market, they'll also know what's working for other buyers and what's not. And that can help you get a better understanding of what's realistic to ask for. What's on the negotiation table? Here are some of the most common concessions an agent can help you negotiate. Sale price, the most obvious concession, is the price of the home, and that lever is being pulled more often today. Buyers don't want to overpay when affordability is already so tight, and sellers who aren't realistic about their asking price may have to consider adjusting their price. Closing costs are usually about 2 to 5% of a home purchase price and include fees for things like the appraisal, title insurance, and underwriting of your loan. To offset the cash you have to bring to table, you can ask the seller to pay some or all of these expenses. This was the most common concession sellers made in 2024, according to NAR. Home warranties. If you're worried about the maintenance costs that may pop up after you get the keys, you can ask the seller to pay for a home warranty. Since this concession usually isn't terribly expensive for the seller, it can be a good negotiation tool for a buyer. It's not a big cost for them, but it can be a big perk for you. Home repairs. Based on the inspection, you're within your rights to ask the seller to make repairs. If the seller doesn't want to, they could offer to drop the home price or cover some closing costs, so you have more room in your budget to take care of the repairs yourself. Fixtures. Want that washer and dryer to stay? Maybe that stainless steel fridge too? In many cases, you can ask for appliances or even furniture to be included in the deal, which will save you money when you move in. Closing date. The closing date is also negotiable. Based on your timeline, you may also request a faster or extended closing window, depending on the seller's needs. This could be great for their situation too. Of course, negotiating for a complex process. Negotiating is a complex process. And not every buyer, every seller will be willing to offer concessions. Again, lean on your agent for expert advice about what's realistic to ask for and what could turn off sellers. Because once you found a home you love, you don't want to risk losing it, but you also want to get the best terms possible on your purchase. And that's where an agent can make all the difference. Just give us a call at 800-306-1990. We can put you in touch with a great agent anywhere within the sound of my voice. We've got lists of almost everyone, and we find out, hey, are they really doing business, or are they just out there? Is this a hobby for them? Bottom line, as inventory grows, buyers are finding have a bit more leverage, and having the right agent by your side who can help you approach negotiations strategically is key. Get the buyer's guides, both of them. rsrlinks.com/HBG2025. rsrlinks.com/HBG2025. That's our annual guide. We update that quarterly for every season. rsrlinks.com/HBG. What's your biggest concern when it comes to negotiating with a seller? Let me know. And we'll put together a solid plan that makes things successful. That is the Real-Time Real Estate segment, brought to you by rsrmoney.com. rsrmoney.com. Let's give away some stuff. We like giving away things. So we've already told you about the buyer's guides. If you're on the other side of the fence, look at the seller's guide, rsrlinks.com/HSG. rsrlinks.com/HSG. And obviously, if you're thinking of selling, you probably want to know what your house is worth, don't you? rsrlinks.com/homewealth. rsrlinks.com/homewealth. No spaces in there. rsrlinks.com/homewealth. That's a monthly report that we put out that helps you get information on the value of your home. And you need to know what the market looks like in your neighborhood that you're selling or buying. So go and get our market report. rsrlinks.com/market report. rsrlinks.com/market report. So that's a report that we put out each week, or it's updated each week. We monitor every home for sale in the country. So even though it may not show there on the opening page, you can change the zip code you want to wherever you are thinking about buying or selling. All you have to do is go to rsrlinks.com/market report and get that information. Now, if you thinking of selling, obviously you want to maximize your sales price. There are 3 very, very specific tools that we use to maximize the sales price of any property we're thinking of selling. Now, not every real estate agent understands how to use these tools, but we're going to share them with you. rsrlinks.com/salesmax. rsrlinks.com/salesmax. That's how we show you exactly how to maximize the sales price. What if you want to give incentivize the real estate agents to sell your house first? Really, there's all these houses on our block, in our zip code, on our street. And you think the agent's going to come to my house first? Yes, because we have a strategy to force them to do that. It's actually called an incentive to do it. rsrlinks.com/salesmax. We put it all right in there for you. And if you're thinking, Ron, should I buy or should I rent? rsrlinks.com/RVO. rsrlinks.com/RVO. Rent or own, which is it that's right for you. We got them all for you. And I've told you before, we're coming up upon a time, and I think it's going to be the end of the second quarter, the beginning of the first quarter, that we're going to really see some real benefits in the idea of restructuring home loans. So what's your number? What would make you excited to restructure your home loan? rsrlinks.com/what's your number? rsrlinks.com/what's your number. And you have to understand there's 2 steps to this. First off, you got to know what all your liabilities are. And we talked about this a little bit earlier today. rsrlinks.com/Sora. rsrlinks.com/Sora. Let's do a high-level look at where your liabilities are. Once we've done that, you might want to go dancing. No, I don't dance. But rsrlinks.com/2step. rsrlinks.com/2step. And basically what we've done is we've shown you in the 2-step a strategy for getting rid of all of your debts. Clean them all up, bundle them into one parent payment. Probably it's going to help your cash flow dramatically. I've seen as much as $1,300 a month saved in cash flow. Okay. And then 6 months down the line, that's where you do the 2-step. You start that right now. 6 months down the line, you should see your FICO score improve because of your utilization ratios, as long as you're disciplined. And then the interest rates we think will be better. We're forecasting will be better at that point. So that's another benefit for you of the 2-step. And we restructure the loan again. No cost to you. We'll show you options that you can do it at no cost. And we take out the expense that's built in to the debt consolidation loan. And we help you go ahead and work with restructure into a longer term loan. Now, you know my belief, the best long-term loan on the market for savvy borrowers, it's got to be the HomeSelect. GetHomeselect.com, GetHomeselect.com. That's where you just save I haven't seen anybody that saved less than $40,000 on their home loan, and I've seen as much as $3.8 million saved in interest expense. GetHomeselect.com, GetHomeselect.com. Can't give you any more than that. We're just helping you build your financial stable. And as always, we ask, set that first radio preset button to come back and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean, who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990 at ronsiegelradio.com. Remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.